There we go.
All right. So good afternoon, good morning to some of us. We're gonna give it another maybe 30 seconds. Let some people.
Give it another minute. Yeah.
Minute, no problem. How's your day, Saba? Good?
It is good. Yeah. It's finally not scorching hot in Houston, so that's good. We like to see it.
Awesome.
Yeah. Get out there without suffocating. So it's nice.
Yeah, Miami's getting better as well. So I can't complain. I can actually step out and not sweat immediately.
Yeah.
So things are getting, the only thing is that the water's getting cold. So
the water.
Yeah.
So you can't jump in anymore?
No. All righty. Let's get it started, Saba.
All right, let's go.
Good afternoon, good morning. My name is Bernal. I am a senior account executive with Angel Oak Mortgage Solutions. We are a non-QM wholesale lender where we have alternative programs for buyers who have difficult times or trouble qualifying in a traditional government loan. Today I have the pleasure to doing this webinar with Saba. You can please introduce yourself.
Sure, thank you. Good morning, everyone, or good afternoon. For those of you who I have not yet had the pleasure of meeting, my name is Saba Mafi. I am a manager over here at Supreme Lending in Galleria. I'm also a producing loan officer. I have been originating loans for the last 8 years. Sometimes it feels like 80, but here we are, you know. In those 8 years, I've had the pleasure of helping nearly 1,000 families. I've closed over 1,000 units. I have funded over 275 million year to date. Most of my business has been first-time home buyers. I've specialized in helping first-time home buyers. It's a true passion for me. I love the hand-holding, love being able to be a part of that milestone for them, and it's just been so rewarding, you know, overall. About 18 months ago, I took a leap of faith and got into more of a niche, if you will, niche down, I guess, avenue, adding these non-QM loans to my business. And if I'm being honest with you, I will say that I was steered away from doing them for the longest time, probably for 6 years, I would say.
Until you found me.
Yeah, until I called him and I'm like, hey, I need your help, you know. I need your help because people need my help. And over the last 18 months, we've been able to help a lot of families. I've been able to help a lot of my realtor partners. And again, I'm going to keep it real here today, been able to do a lot more business. So in the last 18 months, I have closed over 40 non-QM units, predominantly bank statement and DSCR with the help of Angel Oak and Andre, you know, who are my wholesaler, my lender. And I will say that it has significantly helped the volume, especially this year in these market conditions. And we are projected to do about 10 million this year alone together. We're on pace for it, fingers crossed. Of course, you guys already know how it is in this business. You don't want to like count your chickens before they hatch, or, you know, however you say it. But I think we're on pace to do close to about 10 million this year alone. So
that's right. That's right.
I'm excited about
today's webinar, we're just going to be talking about the 2 top programs Saba and I are using the most for your buyers. The webinar is being recorded. It's only on listen mode. So if you have any questions, go ahead and ask them in the chat. On the screen as well, you can see Saba's information. So if your question doesn't get answered, or you have a scenario you want to run by her, please call her. She's fast to answer, I promise, and she's quick on her emails. All right. Saba, anything else before we start this?
We're gonna get right into it.
All right, awesome.
All right, so of course we're here today to talk about non-QM loans and how that can help you as a realtor do more business and help more families. But just to kind of give you background idea, again, like I said, most of my business is about 80% of it has been first-time home buyers, streamline FHA, conventional VA. I'm a direct VA lender as well. I do a lot of down payment assistance for those first-time buyers that need it here in the state of Texas. We've got a few different programs that I have been able to use to help make it more easy for home buying for clients. But again, like I said, we're here today to talk about non-QM loans, specifically bank statement and DSCR. We're going to talk to you a little bit about who these borrowers are, right? So I had mentioned this before. If you don't know what a non-QM loan is, that's fine. That's why we're here today. That's exactly why we're here today. And we're eager and excited to tell you exactly what that means. Now, we're talking about families or borrowers who are not qualified for traditional financing, meaning they are ineligible for an FHA loan, they are ineligible for a conventional loan, they are ineligible for a VA loan, predominantly because of high DTI, insufficient employment history, insufficient income. Maybe they are an investor that are wanting to purchase, more than 10 units, or properties rather. Well, if you are trying to conventional, you can't do that. You're maxed out at 10. Or maybe you are an investor, have a lot of money, you're liquid, you've got reserves, you've got assets, you've got the credit, and you guys, most of these folks they're pretty well to do, they have reserves, they have assets, they just, nobody wants to help them because they don't meet traditional Fannie Freddie guidelines. So we're looking for these type of folks, business owners, entrepreneurs, people that are aggressive, like I said, with tax write-offs, so that's who we're looking for. Credit is there, income is there, income is there, assets are there, reserves are there. And again, we're going to get into requirements and guidelines and things like that. And it's a lot more feasible than you think when it comes to what I just mentioned as being there. Okay. Why is it so important that we tap into this market? It's truly an underserved opportunity. Like I said, when I first started, I was actually steered away. I was told by my peers in my local market, what are you doing? Why do you want to do a non-QM loan? Like, there's plenty of conventional loans to be had. They're easier. They're going to be easier on you. Why do you want to give yourself a hard time? How are you going to find these borrowers? It's such it's a very niche down avenue. And as soon as I heard, no, don't do it, it's complicated, it's challenging, why do you need that? No. Well, if you know me you know that I'm here for a challenge. I love a good challenge. I'm like, all right, let's see, let's go. How hard can it really be, And I don't like hearing no for an answer. So I heard no, for me, just don't do it. And then I also heard no from the clients too, right? No, we've been turned down. Or the realtors would call me and say, hey, they've been turned down by their local bank. They even went to their credit union. Their own credit union has turned them down, right? So here we are, fast forward, now in this economy and in these market conditions where conventional business has unfortunately, gone down. If we can service and learn how to find and what to look for in these type of borrowers, we're going to be able to sustain our business as well. So again, we're here to help you learn from us and what we've been able to do, or what I've been able to do over the last 18 months to keep my volume where it should be without necessarily feeling like such a pinch, I would say is the best way to say it. How can I keep afloat? How can I stay ahead of this? If you were to just do a few more of these deals, and we'll get into the numbers, it's going to make a world of a difference, and you're going to be able to service more clients. So again, these are folks that have the ability to qualify, and nobody wants to really help them because they don't have the resources or the expertise to do so, right?
Absolutely.
Yeah.
And Saba, we're in a market that we can afford to lose a deal right now.
Right.
Any deal that's coming in, we're trying to figure out how we can make it work. Working, especially with a non-QM lender, that we give out exceptions if it doesn't qualify even in our bucket, right?
Right.
So,
yeah,
making sure, guys, you realtors, that you're working with the correct loan officer that's willing to go above and beyond to getting that buyer into the correct loan and making it easier for everybody to get them to the closing table, which is, that's our point, right? How fast can we close? How easy can we close, right?
Right. And the fact that we can even facilitate a loan to these non-qualified borrowers who were, like I said, otherwise ineligible for conventional VA or FHA financing. Okay. And guess what? Again, the proof is in the pudding, right? So if I've closed 40 units in the last 18 months, it means it can be done, right? So again, and that says a lot for the agents as well. This is a piece of business that the agent would not have been able to close otherwise. So I'm glad y'all are here, and I really hope you get some good takeaways from this.
Awesome.
So again, most of the business has been, conventional, streamlined, FHA, VA, and that's okay. Like, that's what it is, and we want that. We love to see a qualified borrower going Fannie Freddie. It's easy. It's we can slam dunk it, no problem, all day long. But 20% of the business out there is going to be portfolio style loans, non-QM loans, bank statement loans specifically, DSCR loans, Andre's favorite. He's going to talk to you a little bit more about that. And that's okay. That's a good loan too. I like it. It's really easy. It's probably the best type of loan that you could really get. No income verification, all that good stuff. So it's a slam dunk. But as we move forward into next year, and we got to start planning that. As a matter of fact, later this afternoon, I'll be doing my business planning with my team on a call. So we're already thinking about 2024, right? And in 2024, like I said, given the current market situation and where we're at, whether we want to admit it or not, again, I'm very upfront and honest. Inflation is still at a high. We still haven't got a hold of it entirely, which is why our rates are at, where they're at right now, right? So today's market rate is going to be, near 8%. And so because of that, we're going to be seeing more folks that are wanting to hold on to their money, right? So you're going to have a lot of self-employed borrowers who are going to want to be aggressive with their tax write-offs because they can be, right? And they want to stay more liquid, which means what? Which means that they're going to be ineligible to go Fannie Freddie because, when we take a look at their tax returns after all of the way that they've managed their expenses over the last 2 years, it's just not enough to qualify. So we're going to see more of these type of borrowers in the next upcoming year, okay? So I think that 20% is very quickly going to jump over 30%.
I agree, absolutely. I think the self-employed growth for borrowers are growing tremendously, especially since COVID. I think ever since COVID started, I guess it was a blessing for, I guess you can say, non-QM. Why? Well, as you know, a lot of people were let go. They still had to pay their mortgage, feed their families, so they started to open up their own business, right? And now coming down those 2-3 years, those business are now producing income for those self-employed borrowers. So that growth of self-employed borrowers are just growing that much more faster than previously before COVID. So we're going to definitely see more bank statement loans, more investors coming in, I think now coming this year, Saba.
And I will add to that, and then these folks are just, because they're so green with their business, right? They just don't have the history or the knowledge as to how to manage their expenses when it comes to filing their taxes, right? So, I mean, I can assure you, because we've got people that have been in the game for a long time, self-employed, and, if they've got a really good CPA, guess what? They're obviously going to be aggressive with their tax write-offs. So being someone who's new, who's green, isn't educated, just know that they are not going to be managing their expenses as well as, Fannie Freddie guidelines would like them to. Therefore, again, coming into the non-QM space is going to be a solution for them.
Absolutely. Your favorite slide, Saba? Tell them about this.
Actually, this is my favorite slide, and here's why. So 100% of my business is referral based. It's always been that way, right? So when by that, I mean, realtors in my local market area or realtors that I've worked with in the past, and is where I get my business from, right? So I will say that for you guys as agents, huge. This is huge. Okay, so we're talking about just closing 3 deals a year using our bank statement program and our DSCR program is going to get you paid. I mean, at the end of the day, you're trying to get paid. You're trying to do your job, right? So, and get paid. If you don't have access to this, and if you don't have the right resources, you are missing out on average of 3 units a year. That's a lot. $60,000 is a lot of money. And I actually looked at a stat that came out, I think it was over the last year to date. I saw that today. Year to date, the average sales price on a non-QM loan is near 600,000. I think to be exact, it was like 584,000.
590.
Okay, yeah, there you go. Yeah, that's huge. And I mean, so just do the math. Okay, we're talking about almost 600,000 times 3 times your, commissions. So yeah, so think about it that way. So yes, this is my favorite slide.
Yeah, and the average non-QM FICO is a 741. So just because it's non-QM doesn't mean it's a bad borrower, guys. These are just borrowers that don't qualify because they're writing off all their income, just like any smart self-employed borrower would be doing. Okay, so just because it's non-QM doesn't mean it's a bad loan, guys. These are good loans out there that people are not looking out for, reaching out to. Oh, you're self-employed? Nah, you don't make any income. No, it doesn't work like that, guys. We have solutions for these borrowers.
It's just they don't fit into the mold of Fannie Freddie guidelines. FHA, conventional VA says, you don't fit this box. We don't like it. We can't facilitate a loan. But by no means does it mean it's a risky borrower. By no means does it mean that it's a bad loan. Okay, this is 2023. There's no such thing really. I mean, if we dive deep into it, we don't do bad loans. There's no bad loans anymore. There's no bad loan programs out there with what we're talking about. Okay, we're still looking for credit. We're still looking for income. We're still looking for assets and reserves. So don't forget about that and don't discredit that, because I will tell you, like I've seen before, online forums, oh, these are terrible. No, these are folks that don't know what they're talking about. They don't even know what this means. But actually, in my opinion, perspective wise, we're not even taking a 600 FICO. We're not taking a 580 FICO. We're actually looking for a higher credit. We're looking for a better caliber borrower. So no, it's actually the opposite of that. It is not a riskier loan.
Absolutely.
Okay, so who are these home buyers? Who are we looking for? We're looking for self-employed clients, entrepreneurs, business owners. We are looking for 1099 borrowers, contractors, realtors. We're looking for you guys, okay? This is a huge loan program for realtors. They, as you know, I mean, I don't need to tell you. You know better than me, right? So how y'all file your taxes, and I'm here for it because I get it. You want to keep most of your monies in your pocket, and there's nothing wrong with that. But you also want a solution. You also want to buy a home, right? You're out there showing folks all day long, and you're probably like, oh my gosh, like I want this home, but I can't get this home because I'm so aggressive with my tax write-offs, but actually make money. Like I can do this. You can do it. This is exactly what this is for. We're
Keep your money in your pocket. Keep your money in your pocket. Use it as a down payment. Simple as that.
We're also looking for investors, right? So those that are wanting to invest in multiple properties, whether it's 1 or 2 or 20 or 30, that's who we're looking for. We're looking for investors, maybe that are aggressive also with their tax write-offs, or maybe folks that were turned down for insufficient employment history. Okay, so say for example, I'm making an example. Here's a live example. I have somebody right now who is in a sales position. Okay, so he's a car salesman, okay? He makes really good money. He's been doing this for a long time. But over the last 2 years, just given, especially over the last year, given the economic circumstances, his income has declined more than 20%. Well, when you have declining income, Fannie Freddie going conventional more than 20%, guess what happens? That file is red flagged, and it's at an underwriter's discretion if you're going to get the loan or not. Okay, so imagine you've been in the business for 10 plus years, you make a killing, you make really good money, but now because you had like one just really rough year like everybody else, you're being scrutinized when it comes to getting a home loan. Okay, so this now becomes an option for that particular type of borrower that is wanting to purchase an investment property, because we are not going to need to verify income. Right, and he'll get into that because that's his favorite type of loan. We don't need to verify income. We don't need to verify employment. We don't care about that. Again, we're going to go into that later. So again, we're looking for real estate investors. Okay, all right.
Awesome. The bank statement program. So the bank statement program was actually created for self-employed borrowers, like we were just talking about, who make a ton of money but have great CPAs or great accountants that write all their income off, right? This program is basically basically off the borrower's bank statement. So what do we use to qualify this self-employed borrower if we're not using tax returns because they don't qualify with those tax returns? We're going to be using the bank statements of the business, okay? That's where we're going to see the business true cash flow, what's really coming in. So how do we calculate it? Calculate that monthly income. Let's just say we're using that last 12 months of bank statements. We're gonna add up all those gross deposits. Let's say we add up $240,000 worth of deposits. We're gonna deduct a 50% expense factor. That's just their standard, but let's just use that for now. 50%. So 240,000 minus 50%. That's $120,000 that we have in gross deposits. We're gonna divide that by the 12 months that you provided, and that gives us a monthly income of $10,000 a month that we can use to qualify this borrower. So he went from making on his tax returns $50,000 a year to making $120,000 a year. That's how much more purchase power we just gave the borrower, okay? Some of the highlights on this program: the borrower does have to be self-employed for a minimum of 2 years. That's very important, guys. 2 years minimum being self-employed. We can use a 12 or 24 months of business or personal bank statements to qualify. There are some borrowers that don't have a business account and they use their personal as their business account, which it's okay, especially realtors. I see a lot of realtors that use their personal account as a business account, and that's okay. Again, no tax returns needed. Actually, if we see tax returns, we're gonna kill the deal. Simple as that. So go ahead and grab those and delete them.
If you send a tax return, we're deleting it. There's just
exactly. We also allow 1099 borrowers. So we have borrowers that are, let's just say, insurance agents, that they may not be owners of the business, but they're 1099 for that business. We're okay with that type of borrower. That is considered self-employed for us. Okay. If we're using the business account, the borrower has to be at least 50% owner of the business to use that business account. And if we're going to be using personal bank statements, the borrower has to be at least 50% owner as well to use a personal account. Okay. The minimum FICO on this program is a 640. So it is aggressive. I think for being a bank statement loan, a 640 FICO is pretty aggressive. We go up to 90% LTV, guys. 90%. Okay. No MI, no matter the FICO, no matter the LTV, just that gives the borrower a little bit more purchase power with no MI, right?
Right.
And we can go up to a $3 million loan amount. I mean, Saba, between me and you, our bank statement loans are usually big loan amounts, right? Anything part above 500,000 is what we see on a bank statement loan. I mean, right now, me and Saba have a $2 million loan in the pipeline. I think on tax returns, what did he qualify, Saba?
Not very much, not very much. So on tax returns, again, he's got a really good CPA. I calculated about like $10,000 a month in income.
And we qualified him for $120,000 a month in income, guys. He went from buying a $400,000 house to a $2.6 million home. How crazy.
Yeah, and this is again, and what's crazy is this, okay? So if you're a listing agent, right? So he was referred to me by the listing agent / developer, okay? So the listing agent calls me and well, actually, okay, I'm not gonna get into all of it, but he calls me and he's like, hey, I have this one client, he's like really well to do. The first person I thought of is you, because I know that, you know, you can deliver on these type of loans. And this is a huge one for me. The buyer really wants it. He's a really good guy. He has several businesses in our local market, and I want to develop a relationship with him, right? So the agent wants this borrower. He wants this client. And he said to me, he said, the only way, and I know he's going to need a bank statement loan. He's like, the only way I will accept the offer is if he works with you. So who you work with truly does matter, okay? And that's a testament to not just myself, like I'm not giving myself flowers here, but also who I work with and, you know, the team I have that is actually an expert in this field, right? And will help me to get these loans done, closed. That's how this agent even knows about it. That's how he knows of me, right? And so guess what? We're under contract. He's got the client. I have the client. And he's able to do a deal. I'm able to do, and in this local, I mean, sorry, in this market right now, think about it. Not many people are going to qualify for a $2 million home. They're just not, especially, I mean, they're just not, okay? Secondly, for that agent to push his $2.6 million listing, very few and far in between, again, because not many people are going to qualify for it. Not many people have the budget for it, okay? So you got to keep that in mind too. So he can do a deal, and he doesn't have to sit there and wait for another 6 months to see, is somebody going to come with cash or is somebody going to come with conventional financing? No, we can take this. So yeah, again, that's really important.
Time is against us. Time is against us. And, you know, like Saba says, it's who you're working with. You know, this is a team effort. Comes from the realtor to the loan officer to the lender. We are a team. Without you take one off, we can't close the deal. So you got to make sure we all work as a team to make sure we get this borrower to the closing tables as fast as possible, and again, as easy as possible.
As easy as possible.
So I think it's just a great story, Sal. I mean, how you went, the listing agent went from showing them, you know, ranges from $400,000 to $600,000 house to $2 million homes. I mean, I think it was just insane.
He could do it. Yeah, and he wanted that. So we're giving them what they want, you know. They're not having to settle, because guess what? I'll tell you right now, like nobody really wants to settle, you know. So, you know, when you tell somebody, hey, I get it, you make $120,000 a month, but sorry, ineligible. Well, eligible, but you can only buy a $400,000 home. Like, what do you think they're not gonna, they don't want that. Like they have taste, they have different needs, right? And you want to be able to cater to them. So again, like I like to say, no one gets left behind.
That's right, especially self-employed borrowers.
Exactly, yeah. Okay, so are you losing out on closing deals because buyers are self-employed? Exactly what we just talked about, right?
Literally.
Yeah, we just talked about this. So we got a self-employed borrower who makes $200,000 a year, and he has a credit score. Like I said, most of these folks have really good credit. They have income, they have assets, you know, they got reserves, right? In this instance, the borrower's credit score is a 758, but he writes off 75% of his income. Okay, so again, that was a live example that we just gave you on a loan that we're closing here in the next less than 2 weeks. But again, this particular person is now left with about $50,000 and trying to qualify for a home, and they don't qualify. So our solution is to go bank statement loan, and we approve the borrower for about $750,000 loan. and they're happy. They're happy, you're happy, we're happy. We're happy because we were able to offer a solution, and that's what we're here for, right? Is to really offer a solution. It's not streamlined. Once you make it, oh, I can only help this type of borrower, you know, oh, FHA, conventional VA, slam dunk. No, you're limiting yourself. You're essentially capping your income. With tapping into this non-QM world, you're able to, it's untapped and uncapped in commissions, guys, right? So 2 or 3 more deals a year. I see that growing for you guys as realtors. Again, I think it's more close to, and it will be closer to about 5 units, okay? And we're gonna get into a little bit more about how and where you can find these type of borrowers, okay? Where are they gonna come from?
I think it's very important, Saba, that these self-employed borrowers know that these programs are out there for them, because a lot of them think, oh, I can't buy a house this year because I have to do my taxes next year.
Right.
No, guys, that's not the case here. We're not looking at tax returns, okay? We're looking at those deposits coming in to that account, seeing the true cash flow of that business, okay? So when you tell
what
a
you're
self-employed
actually
borrower,
making, right? So
right, what you're actually making, right?
right.
So when you tell these self-employed borrowers, you don't have to wait to do those taxes. You don't have to pay Uncle Sam $100,000 worth of taxes. How about you keep that money in your pocket and use it as a down payment, okay?
How about you keep that money in your pocket and do a DSCR loan on top of your on top of your purchased primary residence and cash flow, right?
There
and you
go.
have a stream of income.
There you go. So where are we finding these bank statement borrowers, Saba?
Yeah, there you go. Yeah, so we're looking for business owners, entrepreneurs. We are looking for contractors. In my local market in Houston, I know we've got, in Texas, a lot of contractors, this is like, I'm talking about just a lot, okay? Like I can't even, there's just so many of them out there who are otherwise ineligible because of the way they are aggressive with their tax write-offs. And that's really what it comes down to, you guys. Like it really just becomes, and again, because I look at tax returns every day, right? So every day I look at loan applications and tax returns. I will tell you, the first thing that is going to disqualify a borrower who is in this world is insufficient income because of how aggressive they were with their tax returns. So we're looking for business owners, entrepreneurs, freelancers. We're looking for contractors. Again, agents, you guys are huge for this one too. Hairstylists, cosmetologists, and a lot of people, like Andre said, like at the beginning of this webinar, especially in 2020, since 2020, a lot of people that may have gotten laid off or may have got, lost their jobs or, needed maybe we see, like I see a lot of just, they're not making as much. So say, for example, their hours were cut. Okay, that's going to be a problem too for traditional financing, right? Because we have to take the average of the last 2 years and we got declining income problem. So what a lot of these people have done is they've, started a side gig, if you will, in the last 3 years. Okay, and this is the time now that they're going to be eligible to use that income. And they're, maybe now they're doing something that they're passionate about on the side. In order to be able to use that, they needed the 2 years. So here's another big thing. Again, we're going to go into requirements and guidelines in a moment, but the beauty of this program is that you can actually combine, okay, for the bank.
You beat me to it.
Sorry,
I was about to say that.
It's my favorite one, so I kind of had to get in there with that. So is that you can actually combine W-2 income with the bank statement loan. You've got a co-borrower and a borrower, husband and wife, dual income family, and they want to max out their approval. They sure can. You got a wage earner, somebody that has a W-2 job, they're straight, they're good. But you've got, maybe somebody who started a plumbing business or I don't know, like a cosmetology business, right? Maybe 2 years ago, 3 years ago. Well, we can now use that income and use all of their income, their actual true income versus what that a person may have been reporting to Uncle Sam for the last 2 years. again, like I guarantee you, they were not prepared, and therefore they don't have the greatest history of showing their and managing their expenses on paper. Okay, but they got the income.
I have another example for you, Saba. Actually, I don't think I've told you this one before, but I actually had a buyer where he was a firefighter, and during 2020, end of 2020, he decided to open up a CrossFit gym. I don't know why would you open up a gym after COVID. It's really up to the, again, not my problem, but we were able to use the W-2 income from him being a firefighter, and then recently his business just took off, so we used the last 12 months of bank statements. So we're able to use his W-2 plus the income that's coming from that CrossFit gym that he started 2 years ago, and now it's blowing up. So he was able to get double the purchase power. So we're able to use his W-2 plus the bank statements to qualify. All right, so.
And that's huge, especially with the sales prices that have increased. They're not where they were once upon a time, right? So no, they're not the same as they were 4 years ago. So that's huge. We do need a little bit more income usually to qualify.
Yep. All right. DSCR investor cash flow. So this is actually my favorite program. It's actually the easiest program to do out there as well, in my opinion. So this program is perfect for your investors or anybody who's trying to purchase an investment property and not show any income or any employment. So you're probably thinking, how do we qualify this borrower? We're just qualifying the borrower we're qualifying the program based off the property's cash flow. And how do we get that? So when we get an appraisal, we order the 1007, which is the market rent of the subject area. If that market rent covers our mortgage payment, we're good to go. And that's all we care about, the cash flow of the subject property. Okay, this is truly a no doc program, no income, no employment, no DTI. Just tell us what the cash flow is gonna be for the subject property. Okay, for your investors who own 10, 20, 30 properties, what's the cap, Saba, for Freddie, Fannie on investors owning investment properties?
That's it,
10.
your cap.
Okay,
yeah.
So let's just say they have 15. We will lend them another 5 more properties at once. Okay, this is a perfect program for your investors thinking that they're dead in the water, or for you realtors who own 2, 3, 4 properties and you're trying to go Freddie, Fannie, but you know that your DTI is going to be super high, so you're dead in the water. Well, this is a perfect program for you to grow your business. Not showing any income, not showing employment. We're just going to grab the cash flow of the subject property, and if that rental covers our mortgage payment, so 1-to-1 or higher, we're good to go. Okay, the most important thing, guys, for this type of buyer, they have to be living in a primary home. Okay, they cannot be a first-time home buyer. Now we do give out exceptions.
That's huge.
Yes, huge. But we do give out exceptions where the borrower may be renting, let's just say in California, and he owns several properties in Texas or in Florida, and he's looking to grow his portfolio. Well, that's okay. As long as he's renting and he owns other investment properties, that is okay with us. He just can't be a first-time home buyer. First-time investor, yes, as long as he owns a primary. Correct.
Right. So owning a primary, just to kind of clarify that, if I can, we're talking about somebody, and let me just give you an example, whether they have a mortgage, okay? So if they have a mortgage or they own a property free and clear, it's eligible, okay? But there are certain exceptions, and like I said, these are exception-based type of loans. It comes down to who you have a relationship with, and then the overall profile of the borrower, if you will. But yes, so again, if they own a home free and clear, it's okay. They just cannot be a first-time home buyer. They can certainly be a first-time investor, if you will.
Correct. And one of the biggest things here on this program is that we can close title in an LLC.
That's huge. We have one right now just like that. Like they don't want to buy the home unless they can vest title in an LLC. And you can vest in an LLC. You can't go conventional and vest title in an LLC. So that was another huge deal. The agent called me and said, hey, I have this scenario and I know that you work with investors a lot. how can we do this? And I'm like, we can just do it. Like, that's fine. We can just vest title in an LLC. And she said, because if we don't, they're not even going to buy, like, at all. So again, another saved deal for the agent.
Absolutely. And for you realtors, if you've done business in the last 3 years, you know that, prices of home has gone up tremendously. So if you know that you recently done a loan for an investor and he's hold on to that property, we'll let him know that Saba can do a cash out. And with that same cash out, we can use that money to purchase a new investment property. So what we're seeing now is that we're doing a cash out on one of the investors' properties. He's getting about $400,000, $500,000 in cash out. And with that same cash out, he's going out and purchasing 2, 3 more properties with you. So you're getting 2, 3 loans from this one bar. I mean, there's so many ways of making money. You just have to be creative and know what's going on.
And really get with the right people. And I always tell, all my realtor partners, I'm like, just don't turn anyone away. Like, whatever scenario you have, whatever it is, whether it's like you think it's streamlined, it's FHA conventional, send it to me. I'll take a look at it. If it's, you think it's like a lot of moving parts, you just don't know, that's okay. You're not supposed to know, that's what we're here for, and we'll figure it out. And if I can't do it, I'll let you know, like, it can't be done. And most of the time, like, if I can't do it, it probably just, it can't be done, because we have so much resources, right? We really have so many resources and avenues. But I'm happy to try to think of alternative solutions as well. So on that note, right? What you just mentioned, what did you just mention?
About investors that purchased a home recently in the last year.
So, that's right. Yeah, exactly. So hard money loans. I get a lot of calls like, hey, I have a hard money loan. Like, I have had to keep this for much longer than I want to. Well, I will tell you right now, and I'll be the first to tell you, these loans are less costly than hard money loans by far, like by a landslide. Okay, up front, and we're talking about the rate, the upfront cost, the back end cost. So this is like, and again, for you as a realtor, to tell your client, like, hey, you don't have to do a hard money loan. Why are you're sharing with them the opportunity to save more money in their pocket. So imagine you got a client that thinks they need a hard money loan, and they're about to drop 5 points on the front end, and then also be hit with like a 15% rate or 20% rate, 18, 19% rate. And you're telling them, hey, no, if you work with Saba, she's going to be able to, get you into a DSCR loan, and the rate is going to be relatively close to the market rate. And you don't have to pay 5 points, 6 points up front. They're going to love you for that, right? So again, you are becoming more resourceful for your clients. And those are monies that are saved that they can make other business investments in, like Andre said. So again, becoming resourceful for your clients is huge. That's how, again, working with integrity and just knowing that information, delivering it will get you more business.
And usually these self-employed bars and investors, because some of our self-employed bars are investors, have more self-employed friends, more investors. So as soon as you do a loan, as soon as you do a loan for one of them, and this guy and this bar and buyer tells his friends, can you believe this realtor did a loan for me without showing any income and employment, and I just purchased 2 more properties? They're gonna be like, who is that? Send me your number. I want to purchase 2 more properties. So make sure you're making these connections, because as soon as you do one, it's like a domino effect.
It is a domino effect, right? And it's funny, that's you like hit it on the nail. And people ask me, they're like, hey, like, so how do you get so many non-QM deals? Like, how does that happen? Like, what do you do? Well, firstly, I make sure that I deliver what I say I'm going to deliver, and I have the right resources, I have the right product, I have exactly what is needed. And then from there, I just make sure I do such a great job in delivering that product, and then keeping clear and constant communication throughout the process, that Furthermore, they just like, I don't like necessarily have to do much more. You just do such a great job and work with integrity and really help get it done that it just comes to you, because I mean, it just becomes like bestowed upon you. Like that's the best way of saying it, okay? As long as you're working with integrity and trying to really help find solutions for these folks, because they are a community as well. They really are. They typically, these folks like flock together and they talk, they talk like, who did yours? Who did, So again, it's a really good niche to I guess, maintain, especially right now in this market.
It's definitely important for the realtor to know what type of programs are out there. The more educated you sound to your buyer, I think the more grateful they're going to be, the more they're going to want to do business with you, and the more they're going to hand down or recommend you.
It also separates you from your competition as well, right? So yeah, we can all help a W-2 wage earner. Yes, we can all help somebody who has pretty clean cut tax returns, hourly wage, 40 hours a week, $25 an hour. They look good on paper, but not everybody has the resources to be able to help this like 20 to 30% of folks that, like we said in the beginning, in my opinion, may actually be better qualified borrowers.
A better borrower, absolutely. Yeah. A better buyer, absolutely. All right. Here's just a quick scenario for you guys. Again, we have an investor trying to purchase their 19 investment home. Prior to their funding, it was very cost effective due to being a hard money lender with high rates, high fees, and she was unable to qualify, due to tax returns. So this investor, we were able to put her in a DSCR loan, which is called our investor cash flow, by just using the true cash flow of what the property was going to be. Okay, and we're able to get her into her 19th home. Okay, so make sure you're knowing these programs. Make sure that you know that these programs are out there for these investors, for these self-employed borrowers. Okay. So where can we find these borrowers, Saba? You're the expert in this.
All right, so we talked a little bit about this in like a few slides back, but there are a ton of different ways that you as a realtor can bring in this type of business. And, we talked about realtors, we've talked about, like knowing people in your local market, right, that may also be self-employed, or maybe you had a self-employed borrower that was eligible for Fannie Freddie for whatever reason. Maybe they just weren't aggressive with their tax write-offs. They know people, so your book of business, your existing book of business, when you're making your prospecting calls, like, hey, so-and-so, like, how's the house doing? When as realtors, like, the way y'all check up on your clients and make your prospecting calls, hey, do you have any family or friends that are looking to purchase a property that are self-employed business owners? Ask them, like, just ask them straight up. I guarantee you they do. A lot of the times my past clients will call me and say, hey, I'm calling you. It's not for me. We've already closed our loan with you. It is for a coworker. Her husband owns a trucking business and he's been denied for a home loan. Okay, so these people have referrals. They know, people talk, they go to their friends and they share, like, hey, like, I'm trying to buy a house. They share their struggles with one another. So do you have anyone that is looking to purchase a home that may be self-employed, or do you have any close family or friends that are business owners? Straight up ask for those. Or do you know anyone that's looking to purchase an investment property? I guarantee you a lot of these folks that are looking to purchase an investment property have been turned down for traditional financing. Ask these questions. Be very specific when you're asking for a referral. Be very specific. And then also, again, that separates you as well. And they'll remember that. They'll remember that you ask them about this, because it's very unique, okay? Developers, builders. So especially here in Texas, we've got a lot of development still being, still going up. When you're going into these new communities and you're meeting with the builders, ask them, hey, can I see your turn down list? Like, can I, and tell them why. I'm looking to increase my my self-employed niche, you know, of business, and this is what I'm looking to do. I want to see your turn down list. Builders have a lot of folks that have been denied for insufficient income, insufficient employment history, you know, things like this, because typically the builder's lender, they don't have these resources. They want like cherry on top, you know, in a bow, wrapped up type of loan, Fannie Freddie conventional, that type of borrower, because they got to keep it moving, okay? Or they just may not have the resources for it. Like, simply put, they don't excel in it, they don't want to mess with it, and they just don't touch them. So your developers and your builders are going to be huge. Even bigger than those are going to be your CPAs and your tax preparers.
You beat me to it again.
What?
You beat me to it again.
Sorry. I mean, it's on the list, you know, I got to say it. You want to talk about it?
Yeah,
Go
so
ahead.
I think CPAs and accountants are probably going to be one of your biggest referral partners, just because, especially now that tax season is coming up and they work with a lot of investors or self-employed, you know, you got to become friends with these CPAs and accountants, because they can refer you down to that self-employed borrower who, you know, they wrote off all their income, or that investor that owns 3, 4, 6 properties, 10 properties, and, you know, they're doing their taxes for those investment properties. Those are the partners, those are the CPAs, those are the accountants you want to get familiar with. That way they can talk about you and what programs you can offer to help their own CPAs, their own accountants, you know. So I think CPAs and accountants, I think, will be my #1 choice. If I was a realtor, I would literally be visiting each and single one of them, take them out for lunch, become friends with them. I mean, those are the people that are probably going to bring in the most business, you know.
Yeah, because they know, like, firsthand, single-handedly, they're helping them to prepare, right? So, and when you call them, I promise you, I mean, they're not going to bite, you know, they'll tell you like, oh, great, I actually have a ton of clients like that I may be able to pass your information on to. So I will agree that I do have a lot of business that's referred to me by CPAs and financial advisors as well. So when it comes to specifically bank statement loans, but the same thing with DSCR, they will know as well. Leading into that, I want to talk about title companies. Yesterday, I went to a closing, and at the closing, I met somebody who is an investor, okay? And they did a hard money loan. And so, Andre, we're going to talk about this afterwards. They did a hard money loan, and they're going to apply because they want to get out of the hard money loan. And there's 2 properties that they have, and whoever they initially have worked with doesn't know a thing or two about DSCR loans, and they need to flip out of the hard money to a DSCR. There's 2 properties. Hang out at title companies. I'm going to start doing that from now on. You know, I'm at a closing and I meet, you know, so this particular investor. So and yeah, so again, like your title reps, your escrow officers, they know, because those are their clients, right? So ask your title companies, ask your escrow officers for investor clients, and yeah, that's a good one as well. Social media. All right, so let's talk about that for a second. If you brand yourself, not necessarily like all the way, but actually, like, you know, take the time to let your audience know that you can help those that have been turned down for, you know, because they are aggressive with their tax write-offs. Just put that on your Facebook today. I mean, we can all just take a challenge maybe today, okay, to after this webinar, go on Facebook and just ask your Facebook audience, you know, have you been turned down for an FHA or a conventional loan because you're a self-employed business owner? Put that out there, and I just want you to see what happens.
Yeah, I think social media is huge. I mean, if you're not using Facebook, Instagram, LinkedIn, I think you're just leaving money on the table. Someone else is coming it up and picking it up for you. So unless you're a charity and you want to give out free money, you should be using Instagram and Facebook all the time. I mean, me and Saba are huge social media, you know, people, where we post each other all the time. And I even had a realtor call me like, "Can you do my loan?" And I'm like, "No, you have to talk to Saba." Saba is the loan officer, Mitch. So make sure, you're using those platforms. I mean, they're free, so why not use them? Okay. So we're coming up to 5 minutes left, so we got to pick it up a little bit.
All right. Okay. So takeaways here, again, as agents, please do not tell your self-employed borrowers not to claim deductions on their tax returns. They will not like you. Okay. So don't do that because you're going to be taking money out of their pocket. In fact, let them know that there is something called a bank statement loan or a DSCR loan to where they can still be aggressive with their tax write-offs and not have to pay Uncle Sam. Okay. Don't turn away investor clients because they're on their 20th investment property or wanting to vest title in an LLC. Do not tell them to go get a commercial loan. They don't need to do that. Do not tell them to get a hard money loan. They do not need to do that. Okay. And really simply put, just don't turn anyone away. Okay. So again, I am a one-stop shop. I'm talking about every product under the sun. If I can't do it, I'll let you know up front. I can't do it, you'll know instantly. I'm not going to waste your time. I don't want to spin my wheels. I don't have time for that either. It's just not how I operate. I get it. Time is of the essence. And it takes away from going out there and bringing in more business. I'm very big on that. So you'll know right away that very quickly if a deal can be done or not. Okay, simply put. So do not turn anybody away. We're going to go to the next slide real quick since we don't have too much.
Just say one thing, Saba. Very simple. I mean, if you as a realtor, your loan officer is calling you and telling you, hey, we can't lend to this guy because he doesn't make enough money, and he's self-employed, you're working with a wrong loan officer. I mean, you got to make sure that you're telling them, hey, are you trying the bank statement program? Are you looking at what the income is on this bank statement? I mean, if he's just looking at tax returns, that loan officer needs to step it up. Simple as that.
Also, they may just not have the resources for it. And I will say that it's not for every LO to do either. You definitely need to make sure that you're working with someone that can facilitate this type of loan seamlessly. Again, keyword here, seamlessly. Make it seem like it was easy breezy because it can be, and it is. And after doing so many, right, it's easy. Like for me, it's easy now because I know the guidelines, I know the requirements, I know what it takes, and I can make sure that the client has an easy overall seamless process. And that's what we want to give them. You don't want to force them to work with that LO to figure it out, quote unquote, and they butcher the whole thing because that's just not their gig, and they don't have the expertise or they don't have the team that can really help them to keep an approved loan. Okay, so very big. So just make sure that
we are closing these loans within 30 days, just so you know.
Right.
Just because it's non-QM doesn't mean we need a 45, 60-day contract. We're closing these loans within 30 days, guys.
I will say that we just did a non-QM loan. We closed it. It was 3 weeks ago or so. It was a DSCR loan, and we closed it in 8 business days. I mean, that's
8 business days, guys. 8 business days.
All right. So again, I've told you a little bit about me, what I do. I'm happy to help for those of you who I have not had the pleasure of working with. Every product under the sun, I like to say, whether it is a first-time home buyer, somebody that is self-employed, business owner, someone that needs down payment assistance, I really have every product under the sun. My approval process is very easy. That's the biggest thing, is I like to keep things very easy. I promise my realtors clear and constant communication throughout the loan process. I am able to facilitate a pre-approval within 24 hours. You can call me evenings, weekends, text me. I am very text friendly as well. I promise you, you will get a response very quickly. And my team is also bilingual in Spanish. So if you have clients that prefer to communicate in Spanish, I can take the application from app to close in Spanish for those that prefer to communicate that way. My team is also licensed LO as well. So you're dealing with true loan officers. You're not getting, an admin assistant or something like this. We can talk about rates, fees, things on all sorts of terms. Again, English, Spanish, from app to close. I'm trying to make this as easy as possible for you, whatever we can do. If you have any particular, I guess like a scenario where you need the client to come into the office or you want them to do the application online, whatever it is that you need, we're here to make it easy for you. Just know that it is possible. I do have a 10-day close program as well. So if it's conventional FHA, I can close that loan in 10 days. Again, same thing with these bank statement and DSCR loans, case by case scenario, but we can close in in less than 30 days. We mentioned DSCR, we close it in 8 days. So just know that it can be done pretty quickly as well. If y'all have any questions moving forward, feel free to call or text me anytime. I'm always available, and I'm happy to be a resource for you anytime.
Absolutely. Well, Saba, thank you so much for taking the time and doing this webinar with me. For the realtors and everyone that joined, thank you for taking the time out of your day. I know we have, things to do, loans to close. So hopefully this was very informative. This was recorded. You are going to get a copy of it to the link or through your email. And if you have any questions, please don't hesitate to reach out to Saba. Her information is here on the screen. All right. So thank you, everyone. And hopefully everybody has a great day.
Thank you, guys.